With BIS Commodities, taking a look at the markets and review. Let's start out by taking a look where the markets closed for the week. March corn actually closed up about $1.03, just a hair over 387 in the March. December was pretty steady for the week, but we did close at 3/4 of a cent higher at 417 and a half. Beans were the bigger winner this week, up 17 cents in the March at 990 and a half. No beans, new crop beans, closed 11 cents up, 971. Wheat was up about 6 cents this week in the March at 533. Moving on to the cattle or the livestock markets. February cattle was up $3 and just a hair over 50 cents this week, just shy of 160 at 159.60. Today was the last trading day for Feb hogs. They closed at 62.07, down $1.80 on the week. April hogs closed at 66.15. They'll take over as our lead month starting next Monday. Crude yet to be determined. Looks like it's trading about $1 higher than last week's close at this time. An inside trading week. No new highs or new lows on the week. Looks like it's going to close somewhere around that 52.80 mark. And the dollar looks to be fairly steady this week in the low $94 range as well. But the big news item for the grains this week was our monthly supply and demand report. And what would the USDA do with the balance or the demand side of the balance sheet, knowing what the production numbers are. And we did get a slight decrease in the carry out in the corn. We came in at 1.877 billion bushels from last month. We reduced that 50 million bushels down to 1.827 billion bushels. And there was a combination of increasing ethanol stocks 75 million and decreasing the feed number 25 million to give us that 50 million cut. A little bit less than what the trade was expecting. The 75 million bump up in ethanol was a little more than what the trade expected as well. The weekly ethanol grind this week was showing a steady grind with stocks building. We'll continue to see if that stock build weighs on the market in weeks, if not months to come yet. So that was the main driver this week. The unfortunate thing, or fortunate, how you want to take a look at the market, is upon the release of the report this week, Tuesday's inside trading range for March corn futures actually traded inside Monday's range. So we've seen less volatility on the report day than we did the previous day. I guess that's how you want to take a look at it, if that's good or bad, but it shows the lack of interest in the markets. Soybeans, a little bit more volatility. We did see a reduction in the carryout for soybeans as well. Last month, we penciled in a 410 million bushel carryout, very large compared to the last 20 years. We did drop that down to 385 million bushels. That's 25 million less, and it was the demand increase was both the crush and the exports. We did increase imports 10 million, so we did see the export and grind increase 35 million, but we whacked 10 of that off with inflows, or it was explained that Canadian beans moving in from the north helped raise that import number a little bit, to lessen the blow on the stocks. So soybeans initially found some strength on the initial release of the report, but taking a look at the world numbers, specifically Brazil and Argentina, those numbers were actually left alone. Actually, we did reduce Brazil's soybean crop, 1 million metric ton, from 95.5 down to 94.5, but we offset that by increasing Argentina's 55 million metric ton up to 56. We did slightly reduce our world ending stocks numbers in beans. We slightly increased the corn and wheat numbers. So all in all, the report was not a real large market mover, but we did see some strength in soybeans to close the week out, and up strong on the week. Some of this is tied to the strong export number this week, much stronger than expected. That may have played a role. going into a 3-day weekend as well, with no trade in the grain or livestock market next Monday. And we are looking at maybe a limited participation in the grain futures next week as well, as South America has Carnival. We are out of the market, obviously, on Wednesday. South America has Carnival on Tuesday, and then the Chinese Lunar Year is to kick in as well. So we could see some limited participation. Could be a very quiet week next week, or if an entity has something they want to get done, they could move the markets. So it'll be fairly interesting going into next week. Other than that, right now, the trade continues to look at South America's weather. At this point, the question will their crop be bigger, their soybean crop be bigger than last year? The question is how much bigger at this point, as harvest continues to ramp up in South America. Probably not quite up to 10% yet in Brazil, but we are going to see that harvest pace start to ramp up down there. So we'll keep an eye on the logistics. We'll keep an eye on potential strikes. A few rumors this week that you could see a truckers union strike pop up in Brazil. It's that time of the year to see things start to come to the forefront as well. And then it's on to the acres from that point forward here in the grain market. So we're probably setting ourselves up, other than South America, for a hurry up and wait for news type trade over the next several weeks until we can get a better handle on what type of acres we're going to have in place. Taking a look at the livestock markets, cattle futures did see strong move up this week in the Feb. And probably coming up close to where cash is trading. Cash on a light cash trade this week, somewhere in that 161, 62 range. And with the Febs coming up close to 160, we are seeing the basis come in, and seeing the Fed futures tighten anyway to come in line with the cash market. Still at a premium to the deferred contracts. We are seeing the beef cutout continue to fall out of bed. There are concerns about moving beef across the country, and the hog market is still falling out of bed with the Febs, the lowest price one, going off the board. There is a carry in the hog market. Hogs continue to be killed at a heavier pace than last year, and also heavier weights as well. And the port dock worker strike may be waiting on this meat trade a little bit more than anticipated too, as there is talk that the inability to move fresh pork across the country, and by freezing that pork you devalue it as well. So that could be weighing on things, and there are rumors that we're filling up our cold storage quicker than we need to. So we did see a strong close here the last couple days. The only thing out there newsworthy today was a case, or a story of a case of the BIS virus showing up in a cow up in Canada, but it looked as if the futures market shrugged that off. So again, strong close on the week. Plenty of volatility in the livestock markets, much more so than the grain markets at the moment, and I would suspect it'll continue on that path for the near future. If you have any questions about these markets, any other markets, please feel free to give us a call here at BIS Commodities at 800-373-2525, or check us out on the web at biscommodities.com.